Welcome back to Radio Entrepreneurs. I'm Jonathan Friedman in the studio today, and our next guest is Itamar Chalif from Rockland Trust. Itamar, welcome.
Thank you. It's a pleasure being here. Thank you for having me.
Thank you so much for coming in, and it's a pleasure to have you on the show where we talk about entrepreneurs, and nice to have a banker here, our friends in the community. Tell us a little bit about your background and how you came to be a business banker.
I joined the bank about 4.5 years ago. And prior to that, I had my own boutique financing advisory business. And I help small businesses make strategic decisions about their financing. You can, I guess you can look at the market in 3 different segments. You have the business owners who don't feel that they can obtain financing for whatever reason. And these individuals usually, when find financing, they take it regardless of the structure or the cost. And it's usually not structured correctly, and and sometimes they get involved with predatory financing. The second group are businesses that are successful. They've been in business for a while, and they just lack the financing sophistication. And this group will typically look at financing from a very narrow prism. They will look at the financing cost, the interest rate. They will look at closing costs, monthly payment. What they fail to see is how a transaction will affect the business long term. The other segment I worked with were the exit planners. To properly exit a business, it's a process that takes between 3 to 5 years. Mm-hmm. To maximize the value of the business, minimize tax consequences, it takes between 3 to 5 years to prepare. So exit planners hired my services to help them either restructure or rethink financing, to make the business more marketable in the future, or to make it easier to transfer it to the next generation. So that's kind of the long story. And in late 2009, early 2010, Rockland Trust approached me, said, "Hey, we want to chat with you." It was a fairly long process. It was a very tough decision for me, but I'm glad I made the decision. It's been a great run so far.
So what are some of the challenges facing small business today? We've all heard, certainly over the course of the last, keep adding on, 7, 8, 9, whatever you want to call it, years of softening, recession, et cetera, the challenges of credit markets and credit, supposedly has dried up. Mm-hmm. We've heard over the last 1 to maybe 2.5 years that has softened a little bit, that there is availability. But what do you see as some of the primary challenges that small businesses are facing?
So to answer the perception, first of all, credit is available. I mean, industry-wide banks are lending.
That's what they do.
And they're eager to lend. I guess if we stick with the 3 segments I mentioned earlier, if we talk about startups, for instance, they look at a serious challenge because most banks don't like to finance businesses that have less than 2 years under their belt. And the ones who do,
just from a risk profile,
yes,
track record, yep.
Yeah, it's risky, The ones who do finance startups typically look for a lot of information. It's a long process usually. They look at it from a very conservative prism, very conservative. And you typically look for collateral and some other things that, in many cases, for startups are simply not available. Mm-hmm. The second group I mentioned, a little bit more, businesses that have been around for a while. These individuals, I find that most of the time their challenge is separating business assets from personal assets, separating business debt from personal debt. Mm-hmm. So when they come back for financing later, after they have intertwined all their business and personal assets and lending and everything is one big mishmash, they find it hard to obtain financing.
Is that very common in particular industries, or do you see it across?
It's common in the small business, in a very, very small family-owned business, very, very common.